Recently, I came across a startling development. There only 24% of veterans are using their VA benefits when they're purchasing the house. You guys are missing out on something big. So in this video, I want to explain to you guys who's eligible, what kind of properties can you buy, and how much of a property can you afford? So the reason why I'm doing this as well is my father, he was a World War II veteran. He passed on us a few years ago. Fantastic man, and he would talk about World War II often, but kind of with tears in his eyes, and they weren't good memories. But I want to thank him and all you veterans out there that do what you did or did what you did, so we're free here to do what we want to do in our own free country today. So kudos to you guys out there that served for this country, put your life on the line. And now I wanted to explain to you guys the benefits that you have that, well, I won't say that you earned when it comes to buying your first house. So let's take a dive into VA benefits and see if you qualify and what kind of property can you buy up to. You might be surprised you can even buy up to a 4-unit building with 100% financing. So let's get over to it. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'm here to assist you guys, especially veterans out there, when it comes to home ownership. And even if you own a house now, you might be eligible for a refinance to get you into a better position to bring down those mortgage payments. But what we're going to talk today is about this right through here. This was startling when I came across it. Approximately 24% of eligible veterans currently use their VA entitlements to buy a house. That means 76% don't. One of the biggest reasons why is, you can come right down through here. Some potential reasons for this includes lack of awareness about the program's perception of difficult process and lenders not adequately informing veterans about this. So I'm going to take it on this endeavor myself and try to help you guys out there. So if you're out there and you have a family member, maybe a spouse, somebody that you know that's a veteran, please forward this video off to them if they're looking to buy a house, or maybe if they're a homeowner, how this might even help them in regards to the refinance. So let's dive into some of the guidelines that we face. But what I want to let you know too is recently the loan limits got withdrawn from VA loans as well. So there is really no loan limit. As long as you can afford the payments, you're good to go. The benefit here is too that you don't need any money down. But first off, let's get over and look at some of the things that we want to discuss in this video. So the first thing I put in here is you guys know I like ChatGPT, and I like the direction it gives us to, and at least puts us into context or gives us some bullet points that we can go through. So what I put in here is what is the maximum loan amount that you can get if you're looking for a VA mortgage? Well, it was kind of enticing because it comes down here and says, if you have full entitlement, there is no loan limits. So you can buy a $1 million, $2 million, $3 million home with a VA benefits. Might not be able to go that high, but you can also buy a single family, a 2-unit building, a 3-unit, even up to a 4-unit rental property. You need to live in one of the units, but imagine if you bought a 4-unit building, you lived in one, and there are 3 other rents paid your mortgage for you, and you can live for free. Think about that. That might be enticing for you as well. But you have to have your full benefits or entitlements still enabled or intact to get, those high loan limits. What would behoove you of not being able to get those loan limits? Well, you might have had defaulted on some kind of VA loan. You can see that right through here. So let's break these down. If you're fully entitled, there's no VA imposed loan limits. That's fantastic news for everybody out there, especially if you're looking to buy a multi-unit or you're in an area where home prices are really high and you might have to look into a jumbo program. Texas, California, and Florida, fantastic program for all you guys down there. You can borrow any loan amount without paying a down payment. So that's also a huge benefit for those out there, as long as the lender approves you based on the income, credit, and your debt ratio. So we'd have to get you approved, but there's a lot of benefits out here for you, folks. The next thing is high cost areas. What high cost areas out there? Well, you really don't need to figure that part out, because if you have your full entitlements, you don't have to worry about loan limits. Now, if you don't have those full entitlements, it's basically because you defaulted on a VA loan or some kind of government loan, so you might be limited on to how much you can purchase. If you do have some dings against your credit or your entitlements, you might be stuck at $806,000 as your loan amount in many areas. But if you're in a high cost area like Hawaii, California, and some areas like that, you can actually go up to $1.2 million and still be in the VA loan limits. That's if you don't have your entitlements intact. If you do, you're in full entitlements, so there is no loan limits. Then I asked it, what kind of properties can you buy? Did you realize if you're looking to buy, maybe a 2-unit, 3-unit, or 4-unit building, you could get away with a VA loan, no money down, buying a 4-unit property, and just think, 3 rents. Could those actually make your whole mortgage payment for you? It'd be enticing to look into those numbers. So here's what we're looking at right through here. It's going to give you a layout, the kind of property you're looking at, how many units it is, how much money you would need down, and do you need to live there? So that's what we're going to talk about here next. So you could buy a single family home all the way up to a 4-unit property right through here. No money down, but you're going to have to live there. So that's one of the caveats there. With a VA loan, you have to be living in the property that you're financing. You can't do this on a rental property. That's why a lot of people are choosing this. They're going with a duplex, 3-unit, or 4-unit to get in that revenue from those rentals to help offset those hefty mortgage payments that you're seeing today. So that's what we're looking at right through there. Here's another benefit for you. Let's compare. Let's even say you have great credit. Well, let's compare what your payment would be with a conventional loan, because if you don't put down 20%, you need what's called PMI. So with a conventional loan, you need to put down 20%, but if you put down none, well, you'd have to pay PMI, but the minimum down payment you're required for on a conventional loan, if you're a first-time home buyer, is 3%. So let's go and dissect some of the numbers, what they're going to look like if you would compare a conventional loan with a VA loan. So let's break it down. So if you go to therateupdate.com, you can click the mortgage calculator tools and you're going to come up with this, the mortgage calculator. So let's just throw in some numbers and see how much would change your payment if you went from a conventional loan possibly to a VA loan, especially if you're not putting down 20%. So again, you can go to my website, find this mortgage calculator in there. So you're going to go through here and it gives you multiple options. First, we're going to go with a conventional loan. We'll click that in there. We'll put in the loan amount. The house price I'm buying is $500,000. I'm a first-time home buyer, so I'm only needing 3% down. Okay, that leaves us a loan amount of $485,000. Well, today's rate, we're going to look over here. It's pretty much 7%. So we'll use a 7% rate for now. So let's plug in that in the numbers, 7%. 30-year fixed, but you would need PMI. So what we're going to do is we're going to go down here and you're going to have this PMI rate factor. Just move it up to about 0.55 to 0.6. That's probably going to put you right in range to where you need to be. Then you're going to fill in what your homeowner's insurance would be, as well as your real estate taxes. What it's going to show you right up through here is that's what your mortgage payment would be. Okay, $4,002. It includes everything. It includes the principal and interest, the taxes, the insurance, and the PMI of $242 a month. Okay, so now let's assume maybe this person could get the option of a VA loan. So remember, this payment's $4,000. All right, so let's go back and create this as a VA loan. So if you go over to here, the VA rate today is 6.48. So let's go plug that in over here. So first we're going to change this to a VA loan. You're going to see automatically the PMI factor comes out. So that's going to save us some money there. But you also going to go down through here and we're going to say the rate is 6.48. All right. So to compare apples to apples, this one's you're putting down 3%. The other one you're putting down 3%. So here's what the payment would be. $3,592. We'll round that to $3,600. That's going to save you $400 a month. That's like 10% off the payment. So the payment on the conventional loan was $4,000. It's $3,500, $3,600 on the FHA loan, a 10% reduction in your payment. So that's why most people, or a lot of people, if you hold that VA benefit, especially if you're disabled, you won't even have any funding fees or any other fees from the VA. Now, the VA can get a little expensive. They do charge you a fee. It's not coming from me at the bank or the loan officer. VA actually charges you a fee, but you avoid that if you have any disabilities. There is a percentage you have to have in disabilities. You might know that, but if you need assistance with that, we can help you with that as well. So if you want to navigate how this might be able to help you buy into this market, it might be an opportunity for you to buy up to a 4-unit building and maybe even get your rents to pay that house payment for you. Also, if you're looking to refinance, these are the easiest things to refinance. So if you get into a VA loan, rates come down and you're thinking, okay, let's refinance. It's pretty simple to do because you don't have to re-verify your income to qualify for that refinance. You don't even need a new appraisal. It's pretty simple. We just do the paperwork, taking you from the current rate you're at to where the current rate is at the time. And you have to have at least, in most cases, about a 0.5% reduction in your rate. But if your loan amount is much higher than maybe $400,000 or $500,000, you might only need 0.25% in that rate to really save some money. But I wouldn't suggest that. Please kick the tires, check and see where these numbers and the VA loans would put you. We can assist you with this if you're looking to navigate this at this time. So my name is Dan Frio. I'm actually a mortgage loan officer, federally licensed. So because I work at a federal bank, that means I can help any anybody out there in any state in the U.S. as well as Puerto Rico. The benefit of us as well is we're set up with 33 other lenders. So we're not only a federal bank, we're a very large mortgage brokerage. So you can assist us. Our slogan here is one application, one credit pool. We can shop your loan over 30 different lenders, and that's how we do it. I work at a federal bank, and we're set up with 33 other lenders. A little bit confusing. We'll go to therateupdate.com. Feel free to put in your application, schedule an appointment with us, or give us a call just to explain all these details to you. And maybe this might be the tool to get you into home ownership or saving a lot of money if you're currently in a home right now. So thanks for watching, folks. God bless you all, your veterans out there and everybody else. And I hope you have a fantastic evening. If you need our assistance, please visit us at therateupdate.com. My name is Dan Frio, and I'd love to help you. Have a great day, folks. Thanks for watching. Bye-bye.